Now, a lot of people quite rightly ask, why do we only trade the daily? What's so great about the daily time frame? Well, the answers might surprise you because there are a lot of reasons as to why we stick exclusively to this time frame over and above any other time frame out there. Quite frankly, it's a lot more reliable than trading the smaller time frames. The trends are a lot more stable, and so too is the structure of the market. Trading the daily is a lot easier as well because it requires a lot less maintenance of the trades, so we can simply place the orders and walk away for up to 24 hours or even weeks, depending on what setup it is. You can get a lot more higher reward for your money, and certainly for the time spent in front of the screen, and it is a lot less emotional to trade. And when we've got a time frame which takes the emotion out of trading, then that is a very, very big heads up, because emotions do run the market. Greed and fear are very powerful emotions, and if we can stay clear and be as objective as possible when trading, then that's going to stand us in very good stead indeed. So the daily is a lot more reliable. Certainly, the higher the time frame any trend or pattern manifests itself on, the stronger it's likely to be. So the weekly time frame is going to be stronger than the daily time frame. The daily time frame is going to be stronger than the 4-hourly chart, and the 4-hourly chart is going to be stronger than the hourly. And it's got that pecking order. So if we can get the strength and the reliability of the daily chart, but also have a decent amount of opportunity throughout our trading week or month, then that's a very happy medium. It also gives us more clarity and a broader perspective as to what is really going on in the market. Quite often, when you look at the smaller time frames, you can see a lot of noise, and it can sometimes give us false signals. And certainly when we're prone to intraday news on the smaller time frames, when you see big spikes or inexplicable spikes going one way or the other, it does lead to temptation. Certainly if you're new to trading, a lot of people do get sucked into just to the wild swings that occur certainly intraday. But the daily is very resistant to most forms of intraday noise. When you see these random spikes occurring for no real reason, and then the reason why something spiked is released the next day, and we can steer clear of this battleground riddled with mines essentially. The longer, the stronger, and the higher the time frame, the more structure and reliability we can see. Because if a level, for example, has been respected for the weekly, that's going to be a level which is stronger than a level which has been just respected on the hourly time frame. And there's nothing worse than if you're in an intraday trade and it looks very good, and then suddenly you realize that Ben Bernanke, or there's going to be a key news announcement in 5 minutes time, and your one-to-one reward risk trade might turn into a loss with the added downside of slippage. Fortunately for the daily, we pick a direction, and based on probability, we take the trade. We don't care about news at all. Fortunately, if reward to risk is on our side, sure enough, the news could go in our favor. If it does, then fantastic. We've got a decent reward to risk trade hitting target far sooner than if it had no news in its favor. But if news is against us, then at least we know that the maximum we're going to lose is however much we've risked on the trade. So essentially, we can cut our losses short, and we can leave our winners to run. And that we can do on the daily. The daily has far higher reward, as we'll discuss later. So another key reason why we trade the daily is purely because they're a lot lower maintenance, and the trades that we take on the daily don't require that much care and attention, or they don't need to be monitored throughout the day. You don't need to be hunched over a chart, foaming at the mouth waiting for pips. You can just set and forget. And we shamelessly declare ourselves as lifestyle traders. Certainly we want to use Forex as a vehicle to get good capital growth on our money. We're not too interested in essentially swapping time for money. If we've got a way, which we do in the daily, where we can set our orders up and walk away and have our money working for us, then that's a very efficient mechanism for us to take advantage of when we've got probability and reward steeped in our favor here. So once again, you'll notice a trend that the higher the time frame, the less maintenance it will require. Suffice to say, if you're trading on the monthly time frame, that will require less maintenance than if you're trading on the weekly, and that will require less maintenance than if you're trading on the daily. And certainly if you go to the other end of the scale and you are trading, for example, God forbid, the 1 minute chart, That's going to require a much higher amount of maintenance than if you're just simply setting and forgetting on the daily. So where we could potentially gain as much end of day with a lot less time spent in front of our screens, compared to making the same amount, spending 3 or 4 hours a day in front of our screens, the former is going to be the most alluring option, purely because we can crack on, be safe in the knowledge that our money is working for us and that we've smashed the time equals money link, which is something we are all too familiar with swapping time for money in our 9-to-5 jobs, for example. We've all been there. So we can simply have money working for us and our trades working for us. We know full well what the worst outcome could be if our trade goes against us. Like if we've risked 1 or 2%, the worst that could happen is we lose 1 or 2% if the trade goes against us. But if we go for a 5-to-1 or a 10-to-1 reward risk trade and it does go our way, then we're safe in the knowledge that we've got high probability and high reward on our side. So we can go away, enjoy a bit of lifestyle, enjoy the kind of things we wouldn't normally do, safe in the knowledge that your trades and your money are working for you. So if you consider this scenario, if you're trading for half an hour a day, compared to if you're trading, say, 4 hours a day, but both traders make exactly the same amount of money or percentage gain at the end of the month, who do you think has got the best synergy with time for money, or percentage return, should I say? Let's have a look. Let's examine this closer, because a lot of people don't seem to realize that less time in front of the computer not only is more for your trades, but it also could potentially mean having the best return synergy for the time spent in front of your screen. So for example, we have Jack and John, who both make a gain of 8% on our trading account last month. Jack trades no more than 30 minutes a day, whereas John spends 4 hours a morning intraday trading. But as there are between 20 and 22 trading days in the month, depending whether or not we trade on non-farm payroll day, end of day trader Jack has 11 hours spent glued to the screen, while John has a total of 88 hours, which is the equivalent of a 40-hour working week times 2. So who do you think has the best return on their money working inverted commas for it? If they both made the same amount, Jack makes 8% divided by 11 hours, he makes on average a 0.7% gain per hour working, whereas John, on the flip side, he might have made 8% in the month, which is no bad gain, by the way. However, if he spent 88 hours labouring over the charts in order to get to this 8%, and that equals 0.09% gain per hour, then you know that Jack is in a far better place, because whilst his money is working for him, he could be not only enjoying lifestyle and more time with his family and children, he could also be doing the kind of things he wouldn't normally do, like going to the gym in the daytime when everyone else is at work. He could be playing golf. He could be focusing on another business. Like what a lot of people who go for the lazy trader system, they do that. They have other businesses they focus on throughout the day and trade in the evening or first thing in the morning for their half hour. But the difference is they know exactly what they're doing. And curiously enough, this is a good case scenario where they're both making 8%. What if they're both down, for example? Say if they made an 8% loss for the month, both of them, then Jack is in still a far better position than John, because at least while Jack might have had a drawdown, as did John, at least Jack spent less of his time tied up sustaining this drawdown. And whilst he might have drawn down on his trading account for the month, he could have been looking at wealth generation in other areas in tandem to compensate for that drawdown. And certainly nobody has a winning month every month of the year or of their time as a trader. The daily time frame also gives us far higher reward than if we were intraday trading. And as we're essentially looking to take advantage of key movements and key swings in the market over a hard time frame with a much tighter difference between our entry and our stop loss, that's going to be far more synergistic than if we're simply going for the smaller reward risk trades on the smaller time frames. So one could say that our trading profile is high reward, low frequency, and that you'll see quite a few strategies on the hard time frames adhering to those conventions rather than a high frequency, low reward style of trading, which is very time intensive as an intraday trader on the lower time frames. So as we just mentioned, trading less enables us to take advantage of more reward with less time in front of the screen, so you can do other things. And typically we can go for a 3-to-1. That's our minimum threshold, by the way. We don't target anything less than a 3-to-1. And we can even identify trades, albeit not particularly often, where they have a reward to risk profile of 20-to-1, or even more than that. So the daily time frame for us is where a lot more can be gained from doing a lot less, and that essentially is the best bite of the cherry, where we can essentially have Forex and trading, any instrument for that matter, being used in a way where we can take advantage of it as a vehicle, as opposed to it being like a hobby which is time intensive. One of the more underrated qualities of end of day trading is the fact that it makes trading a lot less emotional. And certainly where we've got money attached to the outcome of our trading decision, certainly if you're new to trading, this is a relatively emotional activity. And this is where a lot of people do go wrong. And certainly the market is a market perpetuated and moved by greed and fear. They're very powerful drivers. But if we can be as objective as possible in this emotion-fueled market, then that's going to be very good indeed, where we can find order within the chaos and an objective decision in the confusion. Then that will serve us head and shoulders above 90% of people who have a go at trading, for sure. So, as we've already established, trading in such a hands-off manner is far more peaceful and relaxing, where you don't necessarily have to tend to your trades. For us, we would not have it any other way. We can't actually comprehend why anyone would actually want to trade in a different way to this, quite frankly, unless they're unnaturally an intellectual who finds trading the markets intellectually stimulating. And even if they do that, we recommend that they don't spend all day in front of the screen, because it is like being in a casino when you see the flashing broker lights on your broker platform and the moving bars. Just like in a casino where they dim the lights, they move the time off, or the clocks off the walls, and they ply you with alcohol. It can be very seductive and very alluring, certainly if you've been staring at the charts and the broker platforms for like hours on end. Even if you haven't found a trade which has fulfilled your rules, there's always that demon inside you thinking, well, I've spent 3 hours here looking for trades, I haven't found a trade, do I just put one on for fun? Of course you don't, but in the moment a lot of people fall into that trap, and it really is a trap which a lot of rookies and people who are even halfway to consistency still keep on making, unfortunately. So one has to be bloody minded about this kind of thing. So the thing that we always recommend is to remove that temptation for people in the first place, and just say to them, why don't you just trade once for half an hour or 10 minutes in the evening, or first thing in the morning if you're out having a good time in the evening. So that leads us to say that this style of trading completely circumvents the temptation to place trades out of boredom, anger and frustration, which is a very vicious circle in trading. And of course, as you'll be trading last thing at night or first thing in the morning, the temptation to trade just for the sake of trade's sake will be greatly diminished. And yeah, a lot of people say end of day trading is boring and uneventful, and yes, it absolutely is, but that to us is only an advantage, because as trading is a business, and we run it like a business with a profit and loss sheet and an account at the end of every month, then it has to be boring. We cannot be trading for entertainment's sake, because that is where money is lost in excitement, and that's a trait that is synonymous with being a rookie. So these are our reasons as to why we trade the daily charts. Hopefully it makes sense, and hopefully, if we haven't done already, in the course of this course, we will be converting you to our way of thinking. Enjoy.